Hey everybody, welcome to our June Bitwave webinar. Oh gosh, we're just so excited. Everyone, we like to give people 2 or 3 minutes to get here, get joined, get started. So we'll start in a couple of minutes here. So people are just sort of rolling in right now, but boy, are we excited to chat with you. This is gonna be a fun one. I don't, maybe I shouldn't take joy in, I mean, that's not that I take joy in crypto winter, but it's fun. Volatility is an interesting time to talk about these markets. So it is fun is not the right word, but this should be an interesting webinar here. And so to go along with this, while people are joining here, we have a poll in line with what I just said, which is, do you believe we are in a crypto winter? I feel like a crypto winter, like we're gonna have to come with like what, Joe, you probably would know this better than me. It's a recession is 3 straight quarters of GDP contraction, right? So like, is a crypto winter 3 straight quarters of the price of Bitcoin goes down? Or actually it'd probably be market cap, right? Like the market cap of all crypto goes down 3 quarters over in a row. Joe, are you here, buddy? I saw you join, but you are on mute, my friend.
Yeah, I was. I unplugged my computer. Yeah. You know, for me, yeah, I think I always watch like how many weekly down candles there are, and I think we're at like 11 or 12 or something. So, as it feels pretty cold. I'll say that. You know,
it's getting chilly, chilly out there.
Yes.
So 13 down candles is a quarter. So I think that's actually, I like that. Let's coin that right now. Let's say 13 down candles is a crypto winner. I don't know, maybe 26. I think 26 is probably a better mark on that one. Good. Okay, we'll give everyone 1 more minute. People are still trickling in here.
One of my favorite things to track is the 200 week moving average. We're below that. That's usually.
Do we go under that?
Oh yeah, at least in Bitcoin we are. Yeah. So to me, sticking under the 200 week moving average is that to me is like, are we at the bottom yet? I don't know.
I was corrected. Thank you, Ron. I was corrected that it's 2 quarters. 2 quarters GDP down is recession, not 3. So I guess like let's call that also. It should be like 2 quarters in a row of market market cap contraction, because like that would solve for, like, let's say there's a future world where Bitcoin is not the dominant coin, which we're kind of, I don't know, we might see here. Then that would be, so the crypto market cap, which went from about 2 trillion to about 800 billion over the last 3 weeks. So I would say that 2 quarters of market cap contraction definitely is a crypto winter. I'm not sure we're there yet, though. All right, let's get started. Julian, go ahead and end the poll. I'm curious what people think here. I'm like super curious. Yeah. 97, even after that great discussion about the intricacies of macroeconomics and like the US economy and GDP. 97. All right, wow. 97% of people, 28 out of 29 people think that we are in a crypto winter, and 1 person, I don't know who that is, maybe that was Ron because he had the definition ready to go, think we are not. Either way, we're not, it's not the best time in crypto, but it's a good time to be talking about it. So hey everybody, my name is Pat White. I'm the CEO of Bitwave. This is my favorite thing I do on a monthly basis, is get together and chit chat about digital assets with all you folks. We are joined today by my good friend and colleague, Joe Dillon. Joe, you want to introduce yourself real quick?
Yeah, sure. So I come to Bitwave after a little over a decade in public accounting. So I'm a CPA. So I like to nerd out on all things digital assets and accounting. And I'm a manager on our solutions team, our product solutions team here at Bitwave.
Perfect. Thank you, sir. All right. So the agenda for our meeting today is, first, we're going to do the 4 trends shaping 2020 so far. I'll tell you what, from when we sent this webinar out a month ago to when we are doing it today, boy, has this list changed. So that'll be kind of a fun thing to talk about. We have some Bitwave updates. So this is for anyone who wasn't able to make the EDAS conference we hosted in Austin last month. We as part of that conference, part of my keynote, we did a big update on all of our where we are, product features, all that kind of stuff. So there's a lot of this is going to be product feature updates. If you made it to that conference, you might want to bail out for the second half because there'll be a lot of stuff you've seen before. But you also might just want to hear me and Joe chit chat about digital assets. So you can stick around. We're not gonna boot you out. And then we'll leave a little time at the end for Q&A on that side there. So let's dive into it first. So part of this is like we just came back from 3 different shows over the last, like, let's say like 3 months. We had BTC Miami, we had Consensus, and then we had NFT NYC. Oh, and Permissionless. So 4 shows. And part of this idea here was like, let's do a little bit of a recap of the shows and talk about the things that we're seeing from the various shows. I have a couple of things I'll even mention about some cool stuff that I saw at a couple of the different shows. So that's where that's where the impetus came from. But then of course, like the entire world flipped upside down for the last few days. So a couple of things that we were going to talk about, like GameFi, dropped off the list in favor of us talking about a few other things, which are way more important. So let's talk about these things in particular. Trend 1 is the continued expansion of DeFi. So I know the market cap overall is down, TVL is down, but there was a really exciting, this is the one that I want to talk about here, is that, JP Morgan, who has probably had the most schizophrenic relationship with crypto of any company out there. Like if you followed the history of Mr. Daimler, hating crypto, bagging on it, think it's the worst thing ever. And then this thing drops on June 12th, which is saying that the JP Morgan plans to bring trillions of dollars into DeFi. Like it's almost hard to grok that. Like, JP Morgan has been getting into this. Like they are obviously fans of crypto. You see them sort of sniffing around. I think they had an IRA product that they were working on, or at least like a high net worth individual product. So this to me is always one of the biggest trends here, is that one of the things I like to say is that, the price of Bitcoin is not the Web3 economy. Like this is I steal this from my favorite radio host, Kai Ryssdal from Marketplace. And he always says, the stock market's not the economy. Bitwave, we say the price of Bitcoin is not the Web3 world. And this sort of goes to show it. It's like this happened right during the height of like some of the drawdown on all these assets. This just shows how important financial institutions are looking at DeFi to basically change the nature of their business. Like most of the financial institutions we talk to are legitimately worried about this. Like I'm doing another webinar today, later in the day, with a group of bankers who are, it is fair to say, are very, very concerned about a world where they start to, where finance moves to be more peer-to-peer. So like it's a thing that I talk about a lot. This is why, crypto winter is a fun thing to discuss. But at the end of the day, like the things that are important about what we're all doing here, the things that are changing the world, is this movement towards, both DeFi, NFTs. Like they are not determined by their price. They're determined by the new use cases that we're all defining here. And DeFi continues to be incredibly important. This is a great ecosystem map. I mean, it's crazy. Like this is an absolutely amazing list of companies on here from across the board, between exchange, like all the different exchanges, the DeFi, everyone doing anything in the space. It is pretty impressive. All of this. One thing that's actually been super interesting is the prediction markets. I'll talk just briefly about this. Like prediction markets have been picking up a lot of steam because crypto, again, is this mechanism, especially from an enterprise perspective, to be able to decentralize some things that are traditional mechanisms. I have another fan on here of Kai Ryssdal. He's the best. I just love that guy so much. If DeFi is this movement towards decentralizing access to traditional instruments, like there have existed prediction markets in the past, right? Like there has always been a mechanism. I could always go to Goldman Sachs, or like, let's take a better example, like Lehman Brothers, and I could have made a bet on pretty much anything I wanted to as a business. That was not always available to every single person in the entire world. It certainly wasn't available to every business. Like I always joke about this, but like, I mean, today Lehman Brothers wouldn't take my call because it'd be hard to get a phone number. But like even back then, they wouldn't take a phone number for someone who's just this like, 50-person little startup. So you're just kind of like, battering your, tilting at windmills. But today, you can go and make bets on Polymarket, and you can make really interesting bets. So one of the bets that I've been seeing a lot lately, and this will tie into our later conversations on the trends, is Polymarket has a deep peg bet right now. So you can go to Poly Market and make a bet on which is the next stable coin to depeg. And I think, and like the terms of that are, I think, drop under 80 cents. There's like some really clear terms on it. And they had like, it's like Tether, USDD. There's a few other ones, USN, that are kind of listed there that you can bet on. So that's super interesting because like if you don't have $1 million to bet on to buy a bunch of UST and short it, then you can actually go to these and do smaller bets that have sort of similar leverage positions and things like that. So this is like, this is the stuff that's just going to change the world, because like that will keep going forever. Like we're not, Poly Market as a function to be able to do some sort of debt obligation swap or some other swap is not going to go anywhere. It is really, really cool there. I'll briefly talk about this, and I'm going to kick over to Joe to talk about NFTs a little bit. But the last piece here around DeFi, though, is that we still have a lot of security challenges. So just today, there was 2 days ago was the Horizon Labs hack was announced. Horizon, the Horizon blockchain was hack was announced. Hack after hack after hack. This is still an enormous problem. It's going to continue to be a problem until we get really serious about digital asset smart contract security. There are people working on it, but it's just a really, really hard problem. And it's just going to get worse also, like as in this bear market, when you have less money to spend on security and less money to spend on bug bounties and stuff, it'll also get a lot worse there. So security continues to be a challenge even in the DeFi world. Joe, get us into NFTs, buddy.
Beautiful. NFTs, it's actually sort of related to DeFi. I think the crypto winter, the bear market is almost good in a sense for some participants. I think it really forces a return to fundamentals, right? Like, DeFi, I think from traditional finance people has gotten a rap in certain areas of like, some of it's kind of vaporous, right? Like there's all these tokens. What are they really good for? I think now is the time to be looking at that DeFi list. And, you think about the last bear market, what came out of that? Your OpenSeas, your Optimism, like there are real players with real functionality that are massive that were built in the last bear. So I think, as we think about DeFi, someone just wrote in the chat, winter kills the noise. It is like this return to fundamentals that I think there's huge opportunities there. I think the same is true for NFTs. When we look at NFTs, like we've got a chart here, that shows like, monthly volume. We're definitely on a downtrend. Okay. This is like a kind of a staggered chart. You can see it just absolutely, kind of ripped going in, last summer, getting into the fall. NFTs just, kind of went crazy. And, the market is coming down, and, that June number is small, but it's, it's an incomplete number. But they're not dead, right? Like NFTs aren't dead. They are still being actively traded. They're being actively traded on OpenSea. I'm still there trading NFTs, but certainly the bear market is washing out a lot of the noise. I do want to make, we could, actually, if we can move to the next slide, I think, this is Moonbirds. I don't know if anyone's familiar with this. There's a guy involved with Web3. His name's Kevin Rose. He's got a bunch of, successful kind of Web3 properties. One of them is this NFT collection called Moonbirds. And I will say there's sort of this dichotomy in NFTs. When you talk to people like me or other people in like sort of the accounting that come from a more traditional finance background, I think there is a rush to sort of dismiss the JPEGs, right? Like, hey, NFTs have all these other use cases, and they do, but we were just at NFT NYC, and you would not, if you attended NFT NYC, you would not think the market for JPEGs is dead. It is alive and well. There are still communities, actively involved. There are, everyone wants to say like, hey, NFTs are a lot more important than the monkey pictures, but the monkey pictures are still happening. And I don't think they're going to go anywhere. That's my take. I think everyone thinks they're all going to die. I don't think they are. I think people have an inherent desire to speculate in the market. And I think there is still this social aspect to NFTs that really has not been replicated anywhere else. So prices are down, but I would say keep your eyes on the JPEGs. I don't think they're going anywhere. But similar to DeFi, when we think about true functionality, I think people are looking at NFTs of like, all right, What else? What else other than, than the pictures of the owls or the pictures of the monkeys? And, there's a couple use cases that we're seeing, ticketing as one, where people say, hey, you can hold an NFT as a ticket. And, that is a potential true business use case. But what I want to talk about is Uniswap V3. I think it is one of the most interesting uses of NFTs in the market right now. And to me, I think is maybe one of the biggest sneak previews of what's to come. So, to quick background for anyone who's not like really deep into DeFi and liquidity pools, essentially, it's a piece of decentralized finance, these liquidity pools. People post their assets into a pool so that they can be traded amongst essentially anonymous participants. In most cases, you put your assets in a pool and they give you back some token. So Uniswap would give you a token. It represents your position in the pool. But they've totally changed their model with the V3 version of their product, where if I post my assets into this pool for it to be traded, what I get back is actually an NFT. And the NFT has this underlying metadata. So there's, in the JPEG world of NFTs, that metadata says,
here's the image you're going to show. Yeah.
Yeah, here's the image. Does your ape have a hat? Does it have laser eyes? But in the financial, in the true DeFi world of NFTs, I put my assets into this pool and I get an NFT back that the metadata underlying represents to me my position in that pool. So if I put a bunch of ETH in that pool, my NFT metadata will say what my rights to that pool's assets are.
But and the really cool part about Unity 3 is it actually lets you define the part of the curve you want to be on. So normally when you go into a liquidity pool, you basically take the same position as everybody else, which is it's a 50-50 pool that no matter where you are, no matter what your position is, you always have 50% of asset A and 50% of asset B. Unity 3 actually lets you put yourself at a different part of the curve. So you can go in 100% with asset A at a price point that is outside of the current trading band. And then as you trade up, as the price moves up into it, it actually relieves, it starts to move into your position in the pool. It is a really, really, really clever way of taking a unique position on within an AMM. And I keep saying this, I swear to God, like mark my words, like one of the guys who works on either Vitalik or one of the guys on this stuff is going to earn a Nobel Prize in economics, because this stuff is just so freaking clever the way they kind of built this out. The other example, Joe, I'm going to throw out one other example, which is that we're seeing. So there's another NFT. There's a NFT lending platform called NFT-Fi, where you can go and you can put up your Bored Ape, and someone can lend you money against your Bored Ape. So that's all fun and games. Like that's great. It's DeFi, it's NFTs, it's NFT-Fi. Like I love it. But what we've actually seen some people take Uni tokens or Uni V3 tokens or bond tokens or debt tokens. Like there are other NFTs that are out there that you can borrow against. I know this sounds very grandiose, but that is in fact the basis of some sort of collateralized mortgage market, or whatever you want to call it, like a more real world property market as we are used to. The basis of that is being able to take a NFT that is representing debt or token ownership or position in a liquidity pool, or or access to Bored Apes, and put that up as collateral and borrow against it. I mean, it's really, really, really exciting stuff that's happening here. And we got a great comment in the comment in the comments that one of the things about Moonbirds, which also falls for Bored Ape, is that you really are designing, like the NFTs that will come out of this strongest will be the ones that have community and that have uses outside of viewing the image. So Bored Ape has fashion implications. They have parties they throw. Moonbirds has a bunch of other Joe, you know that like Moonbird has a bunch of different things that you get from being part of it, right? Like they have a game and stuff like that.
Yeah, you tap into the entire world of Kevin Rose. He's maybe one of the most well-connected people in Web3.
So it's like buying a social token into that.
Yeah, it really is. It's membership to the club. And I think like the lending example is so good. So we're talking about some fairly sophisticated kind of financial level activity empowered by NFTs. And this is not a new statement I'm going to say, but I really do believe it, is that if we fast forward several years, I think it's really possible we're all interacting with NFTs without knowing it, right? Like I relate it back to, the HTTP you put at the front of a web a web address, no one says like, oh, hey, I'm going to go use the hypertext transfer protocol. They don't even know that they're doing it, right? In the same way, I think people will own and will be utilizing NFTs without ever understanding the technology underneath it. And that's kind of what we want, right? That's kind of where the future goes. That's how these things can be kind of, a little bit more widespread.
It was definitely one of the trends at Consensus. BTC Miami, not so much, because BTC Miami is just so focused on Bitcoin. But Consensus and Permissionless, one of the trends was ticketing around that. There were 3 or 4 different companies that were doing ticketing at Consensus. They were like exhibiting, that were serious about this kind of stuff. It is a really fun, like it is a really good use case. Like, just to sort of expand, we're spending a lot of time on NFTs, but it's always worth talking about. Like, the use case that people don't understand about crypto on this stuff, about NFTs. Like, if you take it away from the monkey pictures, the idea of me having a wallet where I have, I'm going to date myself on this. By the way, I was watching this AP Bio show. I don't know if you guys have watched this. It had this great scene where the main character plays a Sugar Ray song, and he like teaches high school, and all the kids laugh at him. And he's like, no, there was this great time in the 90s when that California sound was really crossing the country. And that made me like really sad for like, I don't know, happy or nostalgic or something. I'm like, yeah, I love Sugar Ray.
Me too.
But like, if you look at my, like, if I go to a Sugar Ray concert and then a Bare Naked Ladies concert, then a Green Day concert, and I do all of those with my same wallet. So I buy all those NFTs using my same wallet, so that then my wallet has this history of like these different concerts I've gone to. It becomes really interesting because, first of all, that's like a POAP. Like, it is equivalent to a POAP where I can go and prove that I am I can prove that I was at these concerts. And if it was like Sugar Ray's last concert ever, I have that proof that I was there, and it's really awesome. But then the other side is that then someone looking at me, if I go and I play a game where I use my wallet to sign into that game, when I play that game, they can look at my history of NFTs and they can be like, oh wow, this guy super grew up in the 90s. Like, let's see if he wants to buy a slap bracelet also, or whatever the hell people from the 90s would want. So you can start to do this really targeted marketing. And that's actually what, when, as Salesforce has been getting into it, this has been part of the stuff that they've been announcing has been tied back to being able to do analytics around NFTs. There's a few companies kind of working on that, but it's brilliant, because it's like, it's not this best guess at this consumer. It is saying, this is what this consumer loves. Like, these are the games they play. These are the concerts, the music they listen to. And you can take that and turn it into a profile of them and market to them really amazingly. So it's really, really cool stuff happening there. There's a lot of great stuff at Consensus around this. It is worth talking about. All right. What was this was from like a couple of days ago. Anyways, we are all well aware of the price of Bitcoin. So the other trend that we're talking about here is that crypto is coming under pressure. The meta trend that I would talk about related to this, because we don't want to spend a ton of time talking about the prices overall. The meta trend I would talk about here is, Bitcoin in particular was billed as this phenomenal hedge to inflation. And the first time that we really came where Bitcoin came up against, I used to say it all the time. I won't probably say it from now on. The first time we really came up against inflation, when Bitcoin and inflation kind of like butted heads, is this period right now, right? So we're saying 8% inflation, which is the highest inflation I've seen in my life. Maybe in the 90s, or slightly, there was like 2 months of higher inflation in the 90s, but like pretty much my whole life has been sub 4%, 5% inflation. So highest inflation we've ever seen. This should have been Bitcoin's chance to shine. It wasn't. I think I'm going to give my take on it. Then Joe, I want to hear your take on it. My take on it is that crypto, and Bitcoin in particular, is one of the major buyers of it still tends to be individuals. Inflation hits individuals the hardest. So if you are in a position where you have an inflation, like where you have an asset that's been going up in value, and suddenly your gas price, quadruples overnight, and the price of an orange doubles overnight, you need to draw down something. Today, crypto still is the riskiest asset in your portfolio. You're probably going to draw down your Bitcoin before you sell your Microsoft stock. That's my take on it. Joe, you want to
Yeah, my take is pretty similar. I think about crypto in general as a sponge for liquidity in the market. So the more liquidity there is in the market, the more crypto will benefit. And I think we've seen over the last, several years, you hear some people call, the everything bubble, the up only, all assets, all they do is go up and to the right. And, we've never really seen crypto operate in a macro bear environment. It really never has, right?
It came out of the last bear cycle.
Yeah, it came out of the last bear. So it's been on this run for the last decade or so that's been pretty incredible. So now is where the rubber meets the road. Now it tests all those assertions that we made, like, is Bitcoin an inflation hedge? Well, turns out Bitcoin, in crypto in general, also benefited from excess liquidity in the market that drove asset prices up. And I view it really similarly, Pat. And I think even we see this with some institutional adoption that crypto essentially gets viewed as just like a little further out on the risk curve. If you have, your blue chip stocks and you move over to tech stocks and then startups and seed investment, it's just like crypto is just a little further out on that risk curve. So when everything tightens up, it's the first to go. And I think that's where we are right now. I don't think it's impossible that we decouple from other markets eventually, but the evidence is right here in front of us that we have not. It is we're subject to the same in crypto market forces as everybody else, at least as it stands right now.
The thing we're gonna have to think about, Joe, as like Bitwave, well, maybe we write a paper about this, is like what would it really take to decouple? Because like I would have guessed an 8% inflation. Like you asked me 6 months ago, and you asked me to write a white paper 6 months ago. When does crypto decouple from the economy? It would be when we see a high inflation period again. That proved wrong, but so I think that is a thing for us to kind of think about, which is what that looks like.
Yeah,
Now,
I was just gonna say, I think for me, I think more people actually have to lose confidence in the dollar. The dollar, while we have inflation, we do, obviously, it's like you said, it's the biggest inflation of my lifetime for sure. Comparatively, across the world, the dollar's still pretty strong. I think we can
the dollar's incredibly strong right now. Like the dollar's up against literally every single currency out there, which is, I don't, it's crazy. Like it's so like the US dollar hegemony is the most interesting thing of like all of the stuff we ever talk about, which is like how during everything that's happening right now, the dollar remains like the most powerful instrument out there.
Yeah, and if you go, if you zoom out, there's a lot of people that believe, that the reserve currency status for the dollar is not concrete for the forever. And even now, when you look at like the war in Ukraine and Russia, there are oil contracts being settled in currencies that aren't the dollar.
Yeah.
And some people I've heard talk about that as like, this is the beginning, the doom and gloom viewpoint is this is the beginning of the end for the dollar, losing its reserve currency status. I don't know if that'll really happen. Nobody really knows. But I think, it is that kind of thought process that could eventually lead to that decoupling of Bitcoin to the
Now, it is funny on this screen. The only thing that's green here is the USDC, as we're saying. It's kind of funny. Now it's up like 0.08. So the other thing I'll mention on this, though, that's more macro is what I am excited to watch here is the bounce back, because I genuinely believe that ETH is going to bounce back harder and faster than Bitcoin. So this is going to be my prediction for the day. Is that we're going to see the ETH bounce back faster, and we're going to see Bitcoin dominance just keep slipping. And the reason for that is going to be directly tied to everything else we're talking about here, which is, DeFi, NFTs, all of the useful properties of ETH. There is a lot more intrinsic value in ETH right now than in Bitcoin because of all the global things that have been built on top of it. Yeah, one of the commenters just say ETH bounce back to ETH 2.0. I mean, I don't think it's dependent on it, but I think it'll be highly, highly correlated to it. Like basically, ETH 2 will be the trigger for ETH to bounce back, and I think Bitcoin is going to trail it because Bitcoin is still institutional people coming in looking at this for anti-inflation. They're going to be asking very, very hard questions. Whereas if I want to go and buy a Bored Ape right now, I have to buy ETH. Like you have to have ETH to do that. So there's this built-in thing you're spending money on. So
by the way, Pat, I don't know if we said it at the top. After that segment, it's probably worthwhile reiterating the thing we always say, which is this is not financial advice, investment advice, or tax advice, right?
Yeah.
No advice is being given.
No advice of me. This is no advice of any type. And honestly, it's barely coherent commentary even on top of that. So do nothing with any of this. We got to make, I don't know how that slide got dropped out of the deck. This is not financial advice of any type. Okay. So the last trend here, which we swapped out the very last minute, we swapped out GameFi because we're still seeing really, really cool stuff happening in GameFi for DeFi versus CeFi. And this is directly related to all of this. I mean, everything that we are aware of that's happening right now between Celsius, Three Arrows. I'll talk about even there's there was a exchange that just shut down withdrawals.
Was it Genesis or no? Was it Babel?
No, it was one of the big exchanges just shut down withdrawals also. So it is worth us revisiting this discussion because over the last, let's say, 2-3 years, in a world where Celsius is giving you 8% returns with no questions asked, this stops being as big of a issue, right? People you follow the money, you don't really worry about it. But in a world where Celsius is in a position to basically stop releasing user withdrawals, BlockFi itself appeared like they might be having some issues before FTX stepped in. The exchange that we're just talking about, whose name I
think it was Babel. I don't know how you pronounce it, by the BABEL. I think they were one. There might be others though. There's a lot.
Yeah. And then CoinFlex is the one I was talking about. So CoinFlex is the one I was talking about. Binance had an afternoon where they stopped all withdrawals. So it is worth reiterating here that we are, there are the crypto purists who believe only in DeFi. There are most people who don't really care about the underlying technology and perhaps the centralization or decentralization about this. But it is worth remembering that there is a very big difference between an on-chain exchange and an off-chain exchange. There's a very big difference between an on-chain yield protocol and an off-chain yield structure like Celsius or Nexo or any of those guys. And we have, as a bit of a community, we've kind of lost sight on that. So it's one of those things that you really do want to contemplate your individual ideological position around this, as well as, take steps when you see high volatility, perhaps to get out of CeFi when available. This isn't to say that CeFi is bad. I mean, CeFi is an important part of this. Like the things that Celsius does, and like the big people out there, like all of the big CeFi platforms, they take crypto, they lend it to institutions, they make bets, they do a lot of stuff that you can't do in DeFi. Like it's really hard to lend $1 billion of Bitcoin to JP Morgan in DeFi. That's not really what happens. Like you have to have those relationships, you do those handshakes. There's all this stuff that's happening there. So CeFi has its place where they can do those kinds of things and they act more like a bank and they can make money on it. But then you always have this counterparty risk. And at that point, you also have the risk of liquidity exposure and borrowing exposure and lending exposure. And once you are CeFi, the other thing to remember is that CeFi is by its very nature going to be partial reserves. So DeFi always has, by the way that most of the DeFi protocols are built, this is getting more into the technical weeds of this. The way most DeFi protocols are built is that you are getting basically full reserve exposure full reserve exposure within your DeFi. So that is to say, if I go and borrow $100,000 of USDC from Aave, I have to put up $150,000 of Bitcoin and Ethereum and stuff like that as collateral. If the price moves, that people are selling that to pay back my loan, to get my loan down to a LTV that is within their structure. So you have full reserves and it is all auditable on chain. You do not have that with a lot of these CeFi providers. So there are pros and cons. The ability to do different things is different. The ability to have different yield is different. All that kind of stuff. Joe, you want to add anything about like leverage exposure and things like that?
Yeah, for sure. And I think the key point as a user is really just being able to identify and understand what you're getting into, right? And I think what is so interesting about the CeFi aspect, as you've seen we've seen the dominoes start to fall of Celsius potentially being insolvent, of Three Arrows Capital being insolvent, is that it's a reminder of, hey, I'm a user. I put in assets into Celsius. Well, then they're doing something, and it's not DeFi. It's not on chain. I don't have visibility into what they're doing. And same thing if I'm
and up to this point, there hasn't even been great guidance on reporting, transparency, stuff like that.
And same thing. So same thing as a consumer level that I'm doing in Celsius. Institutions were doing with Three Arrows Capital. They're giving them millions of dollars without really knowing, oh my God, Three Arrows Capital is going super high leverage long. And when the market absolutely rugs out from under us, what happens? What are the implications? And we're seeing it now, right? There are still dominoes falling every day from this fallout, I think. And I think we're going to keep seeing them. So it's a reminder of, I think, to me, the danger of leverage, right? And what can happen when you're levered like that.
Yeah. And we, it's funny. So I was just at the AACPA WSBA meeting in New York, and Joe was too. We were both there hanging out. And one of the things that they had one of the SEC commissioners on talking, and one of the things she pointed out, which I think is underappreciated in some ways, is she said that decentralization is good. She was not talking about us as sovereign individuals or whatever the hell that is. Like, she was talking about contagion, like RE, Lehman Brothers, Goldman, all the stuff that happened back in 2008. And so what's actually really cool about this is you are seeing contagion. Like the whole bear market was triggered by Terra, right? I think it is generally agreed, although I'm sure someone would argue, because people love arguing, but like it is generally agreed that like Terra selling off 80,000 Bitcoin triggered the first major movement off of kind of like the stable price that we were sitting on a few months ago. That then triggered a bunch more sell-offs. It triggered insolvency, which then triggered sell-offs. Like we did see a contagion, but we did not see a contagion collapse, right? Because that was a concern after Lehman, was that essentially we were going to see the entire financial system in America collapse because we were at whatever 100x leverage across every single company, and everyone was going to unwind and collapse. We didn't see that, and that's really saying something actually very strong, because there is no backstop on DeFi, right? There is no government that put in $1 trillion bailout of the financial service industry. That was the only way we got through 2008. No, like companies failed, people went out of business, people went insolvent, but like we as DeFi did not implode. And that speaks really well to DeFi and the future in general. I mean, honestly, that's a really, really good thing.
Yeah, Pat, you look at true DeFi like Uniswap. Uniswap is chugging along.
Uniswap had its biggest month ever.
Right, that's what I mean. And Uniswap is true DeFi, true decentralization, right? And it's going to keep chugging along as long as the Ethereum network is alive and active. And I think it's just, when no one cares about decentralization when prices are going up. Right. When when we're seeing the opposite, all of a sudden it's that same sort of mindset of return to fundamentals. We are reminded of the value of that decentralization.
And I would say maybe a way to think about this would be like, we talk about don't put more money into crypto than you're willing to lose. But I actually think that crypto is getting to the point where it's stable enough. It's not investment advice that like that. I certainly have a lot of money in crypto, probably more than I would be willing to lose. But I'd say the next round of that is don't put more money into some sort of CeFi protocol that you're not willing to have locked up. Someone in the chat mentioned the Coinbase 10K or whatever the filing they did, the SEC filing they did, where they basically said that their customer assets would most likely be would fall under bankruptcy proceedings if they had bankruptcy issues. And that also is a very important distinction between someone like Coinbase with exchange assets, so assets that you just put on exchange in Coinbase and leave there, versus a custodian like Anchorage, who Anchorage really does have a lot more. And I'm not a lawyer on this, but basically being a chartered bank and then basically storing your assets as part of as part of like an agreement to custody assets for you. They have a lot more protection on your assets in a custodian than you would tend to have in a direct exchange. So, that's not legal advice. That's just sort of like the things I've read around and heard, but it is a great thing to think about. Like when you are valuing, like if you got $100 in exchange, that's fine. But like, if you really are holding $1 million in exchange, you're getting revenue there, people are sending you money there. That money is not yours. Like that money is the creditors of that company until you withdraw it. If anything were to really happen, you would probably be, users are going to be very high up in the bankruptcy payout list, but you're not at the top of it, right? So very important thing to kind of think about there. We're not going to spend a lot of time on this, but this is just my thing. Like we're crossing the chasm. This is the most fun thing in the world, which is like people tend to think about digital assets as this like homogenous market. Like today, like crypto's one market. Crypto is anything but one market. Crypto is 10 or 20 different like micro markets in between it that are basically moving along this, where you have the visionaries like Greenwich and Elite and Stoner Cats and all those guys today that over the next year will go from Greenwich as today to Shell and Exxon doing digital assets, OpenSea and Mythical today, EA and Sony tomorrow for gaming. So this is what we're really seeing on the drive here, is just this crossing the chasm, all these different these movements out there. So all right, we've got about 20 minutes left. That's totally fine for Bitwave announcements, because that's fine. So all right, Joe, you're going to kick us off here because this one's so freaking exciting.
Oh, beautiful. So yeah, we announced at EDAS our certification program. So the Bitwave certification program. So it's akin to what you may have seen in other software platforms. Of what we want to do is we want to certify our true users of our platform. And I think our end goal is that this becomes, well, one, we hope people are proud of it, but it should signal a level of expertise in Bitwave, in crypto accounting, that you both have a competency level to handle crypto accounting and handle the Bitwave system. So we're kicking this off. I think later this month we're running a pilot program to start off, of where we're going to do a training session essentially, and there is a test. You do have to pass a test, but individuals that pass the test, and now this is going to be focused at Bitwave users, they'll receive a certification, so they can be a Bitwave certified user. And we're doing something really cool with it, which is if you pass the test and you get certified, we're not going to give you some piece of paper or some, what we're going to give you is an NFT. We actually created a certification NFT that anyone who passes our certification course will be able to receive from us. I think we've got an image of the NFT itself here.
Notice the moving background.
Yeah. That is a GIF in our NFT. And so what I want to relate this back to is kind of what Pat was talking about with NFTs before, of like the power that they carry in to leverage a community of people and essentially for that community to have utility, to have benefits. So what does that mean at Bitwave? Well, one, it makes you part of sort of this greater digital assets professionals community. I think we've seen the benefit of those communities through events like that the AICPA runs, or the WSBA is so huge in this space. I think we all know inherently the benefits of being part of one of those communities, and now we'll have that available in Bitwave. And so what does that mean to holders of the certification? Maybe it means early access to new features and capabilities. Hey, we're testing out this new thing in beta. You're going to get it first. You're going to get a chance. You're going to get a chance to provide feedback on it, to us at Bitwave. We're going to have special training content. I'm still lobbying for, a steak dinner with Pat for NFT holders.
I like that idea.
Maybe that'll be at EDAS 2023.
Yeah.
But, so this is really just the start for us of establishing our users as part of this digital asset professional community.
And there could even be some things down the line. I mean, honestly, in the vein of what we've been talking about, imagine we could have our partners, of which we partner with a number of institutions. You could get discounts on partners by having the Bitwave cert. Like, this is what's so cool about NFTs, is they can enable these crazy use cases, like, discounts to use Anchorage. I mean, that's not one, but like, for instance, like something like that like you could imagine. So we're really excited about that. This is going to be a really big deal. Reach out to, if you are interested, reach out to info@bitwave.io, and we will get you hooked up. We're kind of slowly rolling it out. We're doing our first class in July, and then we'll have our second class. The requirements are, it's a 2-hour class. There's a test, and you have to have done at least 2 monthly closes with Bitwave. So that's those are the requirements right there for the certification. All right. I'm just going to say this really briefly. Bitwave, we've been super, super, super busy. Here are a bunch of the different chains we've added between Casper, Flow. Coinbase Prime is one of their custodian products. We added Anchorage integration, Immutable, Prime Trust. This is, if you are using Prime Trust, this is a big one because we can track your account and potentially your customers' accounts as well. NIDIG is one that we've been working on for a very long time. We have there Near, Hecko, and then this little guy down the bottom is we added full support for Uni V3 NFTs for tracking deposits into them and tracking the underlying asset base there. So we've been super, super busy on that side there. Joe, you want to tell us about the advanced accounting module?
Yeah, for sure. So we get new features within Bitwave, and I think the first feature we want to talk about is the one that I think for the last 6 months I've been asked about the most, which is impairment. I think impairment is like the one thing that, you know, sometimes I'm always impressed with Bitwave and what we're able to do, and sometimes I like to ask our customers of like, hey, what did you do before Bitwave? Because like I've tried to do this in Excel and it's essentially impossible. Like, what did you do before Bitwave? And I think
we have a customer who had one full headcount on this, who had they had one full headcount on maintaining their impairment spreadsheet. And that's not, I mean, that's like, yeah, I get it.
And even at that, Pat, I'm impressed they're able to do it. I think this is the number one thing that the answer to that question of, hey, what'd you do before Bitwave for this? We didn't do it. Yeah, we know we've been supposed to be doing impairment. We haven't had a feasible way to do it. So we just rolled out and we've been meeting with a lot of our customers that are using impairment, and they are using our impairment feature today. And so what that is, it's a flexible impairment testing module that allows you to set some parameters as far as how often you want to test for impairment. You know, this is because, you know, digital assets are still fitting until, you know, we see some new regulation passed. Digital assets are still in that intangible asset bucket. And so we need to test them for impairment. And so by leveraging a platform like Bitwave, what we're able to do is, you know, test impairment for every asset you have on a lot by lot basis, on a daily basis. So right now we have customers that are using our impairment module to test, you know, hundreds of different tokens, hundreds of different assets, every single FIFO lot that they have, and they're testing it versus like a daily low price. And what we do at Bitwave is because we've already been tracking your cost basis info. We've been calculating your realized gain and losses every time you dispose something. So this fits really neatly right in that, where now we're going to be tracking your carrying value right alongside of that data. So now as you use our impairment module at Bitwave, we're going to be tracking, you know, the impairment expense, and we're going to be, I mean, you want to talk like, I actually just did a demo of impairment for somebody earlier today. And what they couldn't stop talking about was the auditability of it, because we are literally going lot by lot by lot, and you can pull the reports out of Bitwave that show you, I mean, that when we talk nitty gritty detail, you can see everything on these reports. And so far, the feedback we've gotten has really been excellent. So impairment is something we are super excited about at Bitwave.
Yeah, the other piece of this is we always talk about optionality. You can configure this to do daily, weekly, monthly. You can configure high, low, close, average, whatever you and your auditors and your tax people think, or your audit people, your advisors think you should be doing for impairment. We can kind of support. The other thing that's worth mentioning is that this is it is very similar, but it is fundamentally orthogonal from your tax tracking. So with Bitwave, it is possible to run a action level, like a impairment report for accounting purposes using something like FIFO. So like, you know, US GAAP, FIFO impairment, and then separately run a spec ID non-impaired gain loss report for tax purposes. And it is 100% supported to do those two things separately and have those two different models there. So it's a really cool part of Bitwave is that you can actually have, we allow you to basically bifurcate. I mean, no one wants to. This isn't something that we all want to do, but because we have to, you can have separate treatments for tax and accounting for this. You know, where I think that's going to go, to be super honest, like this will give you guys a little sneak peek of some stuff here. I think we're going to get very quickly into the point with some of our stuff where we are going to have bifurcated accounting and tax inventory treatments. Right now, we tend to have one treatment. When you choose a DeFi treatment in Bitwave, you tend to have one result of that, right? When you choose to stay in a liquidity pool and keep it on balance sheet, that impacts both your taxes and your accounting position. I think what we're going to start to see is actually we're going to start to see bifurcation on that. Where basically from a tax position going into a liquidity pool is a disposition, from a accounting position going into a liquidity pool is actually a on balance sheet action. And we're going to see further bifurcation of inventory. It's not going to make everyone's life easy, trust me, but Bitwave will be here to kind of help you out through this.
Yeah, I think it fits right into the ethos of Bitwave, which is like, yeah, I think our out of the box treatments are great, but our whole thing, you tell us, how do you want it? How do we need to flex the system, accordingly? Impairment fits right into that. So does this next piece, role-based access controls. This is something we are really excited about. I mentioned auditability with, with the impairment module. I think it's something that we're seeing as the digital asset space matures, and I think the people involved. So now, we're no longer talking just like native little crypto companies. We're the big players, institutions. We're talking big four auditors. All the people that have real, I would say, impactful opinions on these things. And something we talk about a lot with them is internal controls. And how do you handle segregation of duties? How do you get the same level of user access controls and visibility into your digital asset activity that you might have in a traditional ERP system like NetSuite? And so this is something we're rolling out now, where we are talking like process, we have some standard kind of canned roles that limits permissions so that you can have the same accounting team split their permissions across the team. So maybe, you have one person who's categorizing transactions, but that individual doesn't have the authority to actually push them into the ERP, right? Maybe you bifurcate that process so that some review can happen. And then the ability to run reports based on those users. You can see exactly who did what and when. And I think that's something we're really excited about here. This sort of like customizable nature as far as, kind of role-based controls here.
For anyone, thank you, Joe. That was very well put, my friend. For anyone that wants access to this, we're going to be rolling this out pretty slowly over the next like 3 to 6 months. So for any of our customers that want access, just ping us, ping your customer success agent, ping me, ping whoever you want. And let me know. We can get you alpha access to this functionality very, very soon here. So amazing. So I'm going to talk very briefly. We have a couple of things I want to cover, but we'll talk very briefly about the advanced pricing module. There's a lot of really cool stuff coming out here. This is another one that if you're interested in this, ping me. We're going to be doing alpha access over the next few months here. So one that we've already had this for a while, but we're really blowing out a lot of the capabilities here is very, very highly configurable pricing rules on a token by token basis. So this is to say token by token and date by date. So one of the things that's sort of happening is that we're all getting into more tokens. We're all getting into more discussions with auditors, and those two things can kind of come to a head where you might be in a token like, let's take something like Sand, like a smaller token that might not have great coverage on Coinbase or someone else, and you need to price it. Like you don't, as a practitioner in the space, you don't really get to say, well, we're not going to price it because I don't feel like it, or it's not on Coinbase. Like you have to, the IRS expects you to recognize revenue if you're given property with value, and the IRS recognition rules are a lot less stringent than like SEC than like the US GAAP rules, and so they want you to do that. So most of our customers have to be able to price assets, even very, very long tail assets. So what we've done here is that we can basically help you come to a determination on principal market on a token by token basis. We have reports. We can look at your history. We can look at like general worldwide history to help you with that. We have a lot of reports we can use to provide that data with you. Once you make a decision, we can basically set up rules and say like, hey, Coinbase is what we're going to use for principal market before it hit Coinbase. Like this is the other issue is a lot of times, if you want to use Coinbase as a principal market, at some point in the past, it might not have been on that market. So you might need to flip back to a different thing like Crypto Compare, CoinGecko, or even going directly to the DEXs. So this is out there now. Everyone who's a Bitwave customer is using the core functionality here. The advanced pricing module allows you to actually set these rules yourself, set them for whatever periods you want, and then go forward and get actually very, very detailed pricing reports for all of the data there. So thank you, Lewis. We were glad to have you here too, my buddy. So this is great. If you're interested in this, we have a lot more stuff that's coming around this. So one of the other things that's going to be coming with this is pricing exception reports. So something that Bitwave lets you do is it does let you override pricing because there's many, many different reasons you might need to do that. As part of the advanced pricing module, you'll be able to get pricing exception reports, auditability of who overrode price, what price they used, all that sort of stuff. And as part of this, we're also providing a lot more visibility into the prices. So here's the price. Here are exactly the candlestick at that moment in time. Here's the one we chose. Here are the rules we went through to get here. So lots of really exciting stuff happening in the pricing world here. So that's those are the big updates from the Bitwave side. I think we have one more poll. And so while this poll is going, feel free to send any questions in. So we'll leave the last 5 minutes here for Q&A. Feel free to send any questions in for Q&A. Amazing commentary, amazing chat in the chat today. Like, do we need to set up a Discord channel for these webinars so people can just chit chat and see old friends and stuff like that? This is awesome. I love it.
And maybe an exclusive Discord channel sounds like a great benefit.
Sounds like an NFT
certification NFT holders.
Sounds like an NFT. Yeah, definitely sounds like an NFT. I can think of so many different use cases for that. Like better act, like even like discounted rates at trading platforms, like discounts at I can think of a lot of really like discounts to consensus and things like that. Maybe we work on that for next year. Is like if you have this, you get discounts to different like trade groups and things like that. I like it. I like it a lot. I'm curious
where everyone's gonna fall here.
No questions so far. Anyone want to, you guys any macro questions? And we can go back and we had a few discussions here about legislators. I agree. Although I will say I actually was relatively impressed on the Loomis bill. The Gillibrand Loomis bill was not the worst thing I've ever read in my entire life.
For sure. It's definitely still thoughts on FTX buying everything. I mean, SBF, I mean, it's like the classic Warren Buffett, like buy when there's like blood in the streets. I think that's Buffett, right? Sam Bankman-Fried is doing it in spades right now. He's got his sack of money and he's going around.
They were smart. They didn't really over leverage like everybody else. They didn't really do this in the same way that everyone else like really was like, because essentially, I mean, all these yield programs that people were doing, like Celsius, Nexo, all these guys, like they are lost leaders. I mean, I don't think any of them were straight profitable. I could be wrong. I don't know the details. This is not privileged information. Most of them, in my perspective, were either lost leaders, or if you look at like the way this happens on DeFi, they were inflation metrics, kind of bag holder structures to get through it. So FTX didn't really play that game too much. They offered pretty reasonable yields. They offered like Ron, I saw that number today. Is that right? That's right.
That's like a 98% discount from the BlockFi Series E funding. It's pretty crazy. Well, I don't know if that's real.
Can this possibly be right?
I don't know. The under the hood at BlockFi might look a lot worse than anybody realized.
I have some Bitcoin in BlockFi.
Well, this is the classic phrase that was drilled into my head when I got into crypto. Not your keys, not your coins. Like, well, maybe we'll talk.
So I wonder if what happened here was that overnight, basically everyone just started pulling all their money out. I wonder if like AUM at BlockFi also just plummeted after all this. Like, there's got to be contagion in that. There will be contagion in the CeFi space, like Celsius to Nexo to BlockFi. Like, there will be contagion there. But why? How do you do a $250 million line of credit and a $25 million valuation? Am I dumb? Did I skip that class, that finance class in college? Like,
yeah, I don't know. That's a lot.
It's essentially like a leveraged buyout, right? To bring more or less, they're bringing $250 million of debt onto the balance sheet to like buy the company out or something? I don't
Yeah,
know.
I don't know. I do want to touch on, I
Oh,
think
it's a revolving line of credit. Yeah, that's a good point, Kron.
you know, David did post a question about, the rules functionality in Bitwave. I think we haven't spoken on this a lot. I think one thing we're also working at Bitwave is visibility to the user of some of the things that are happening in the background, like our rules engine, right? So the ability to know when you're running rules and they batch overnight, what trend did it code any? Did it categorize some? Did it not? We're working on a lot of sort of under the hood kind of things at Bitwave that we don't necessarily talk about a lot here. But I think, David, you bring up
This is one,
a good
David, that's actually
example of one.
super near and dear to my heart because
Yeah.
I built the rules engine and I hate how it runs right now. But like you end up, when you're doing startups like this, like you end up sort of making trade-offs between the complexity of the code you're writing and then like getting stuff out to customers so they can use it. So the next iteration of this, which we're not talking about too much, but you guys get a sneak preview because everyone's who's staying longer here, is we are actually separating this out. So you will see actual job runs. It will not be transparent. There will be a mechanism to trigger job runs, and there'll be a mechanism to do dry runs on it as well. So it's something that's been like deep in our we know it's a super obnoxious issue.
So
that's a good one.
Stay tuned.
Stay tuned. Julian, before we go, what was the answer to the last poll there? It's just crazy. All right.
Okay.
Well, all right. Yeah.
I like that.
Yeah, I like that too. That's pretty good. And so this is 20, so 43% bullish, 50% cautious. All right. So most people are cautious. That's good. That's good. And 7%. So 2 out of 28 people on this one, bear who actually voted are bearish. All right. I like it a lot. Cautiously optimistic is the tenor.
It's kind of cliche, and if you ask me, a little corny, but you hear it a lot in the space. It's not a bear market, it's a build market. And even though it's cliche, I think, for folks like us, it's really true, right? We're heads down, improving every day. And I think with our visibility into the space, we see so many companies doing the same exact thing. So I think I am still bearish. Or I'm bullish. Oh, look at bullish. Me. Maybe that was a Freudian slip.
We can't talk about Luna. They're like Luna's like hurt my heart too much. They like made an enemy for life from me.
No,
never. All right, you guys, we are at time. This was my absolute favorite hour of the entire day. Thank you so much for joining us. Thank you so much for taking your time today. Feel free to drop us a line, info@bitwave.io. My name is pat.white@bitwave.io. Drop me a note if you need anything at all. And thank you so much. Have an absolutely wonderful 4th of July weekend, everybody. If you're in the US, have fun.
Bye-bye.